Meantime, China's economy is showing some signs of damage from the trade war with the United States. New export orders in April fell to their lowest level since 2022. That was when COVID was ravaging the country. Overall, manufacturing activity in China was the weakest in more than a year. President Trump has hit Chinese imports with tariffs of 145%, accusing Beijing of treating the U.S. unfairly. Our next guest has some additional new data on China. Joining us right now is China Beige Book COO Shahzad Qazi. Shahzad, let's talk about these numbers, what you're seeing, because you guys are really doing this on a moment-by-moment basis. We're looking at the month of April, and April started off pretty strong. It's not what you saw at the end of the month.
No, not at all. As a matter of fact, the weakness that you're picking up in manufacturing that we're picking up, that started in March. That's where the initial pull forward and the inventory ramp up stuff stopped helping the manufacturing exports. And you see a slowdown in output, you see a slowdown in export orders, and then the weakness builds into April, where if you look at direct orders from the U.S., they are they're contracting and they're incredibly weak. So manufacturing has a lot of pain that's becoming obvious.
It was interesting, though, that manufacturing had a lot of weakness in China. Some of the other areas looked a little stronger.
Yeah, so the rest of the economy is actually holding up for now, which is quite predictable. But that cannot last the longer the trade war goes on. How
much of their economy is manufacturing? Because in our economy, we're more of a services economy. For them, it's a big component of what their economy is.
They have become incredibly dependent on the manufacturing sector. As a matter of fact, more so, I would say, in the aftermath of COVID, because domestic consumption has been incredibly weak, choppy at best. You've got a massive property crisis that they're still digging themselves out of, which has left manufacturing as the core driver of economic growth and the post-COVID recovery.
So when we hear kind of the conventional wisdom is that China has a much higher pain tolerance for pain than we have in the United States. What does that mean to you? What kind of tolerance do they have for something that hits such a key, important part of their economy?
Well, what they've done is begun quietly helping the export sector already. So if you look at borrowing, for example, in our numbers, it has exploded for the manufacturing sector. They're stepping up additionally on the fiscal side through more activity. So they are trying to stimulate the economy, provided some stability. They could do this. They haven't done big stimulus in several years, which means that they could keep ramping this up slowly. But the fact is...
Meaning what? That they're just going to prop this up, but they're not going to have anywhere to sell their goods?
That's exactly right. They could prop this up, and then I think what they're really going to rely on is transshipment. So I don't buy this whole thing that Chinese manufacturing is going to completely collapse, because what they're going to do is just rely excessively on rerouting their goods to the U.S. through these third countries.
I don't know how much more from them. What's the multiple we buy from them versus what they buy from us?
Right.
Then why isn't it? It just seems that the knee-jerk take would be they have a lot more to lose, since it wouldn't be that they can last a lot longer than us. The only reason I think they can last longer than us is because they don't care about how their people are doing. Right. So they can last as long as they want.
Or if they're just paying them off, if they're just doing stimulus.
They don't have elections, so they don't have to worry about being reelected. But if it was purely how much they depend on us versus how much we depend on them, we should be able to wait much longer.
I think there's no question about the fact that we've got way more leverage. But the reality is, if we get empty shelves in a month or in a few weeks, that creates immediate pain.
We're pampered over here. Over there, it's like let them eat cake.
They went through 2 years of COVID that absolutely destroyed the economy.
Right.
So they've suffered through this.
So we get a little price increase over here. We're going to throw in our cards and fold.
That's part of it. The other thing, of course, is, though, we've also gone through this before when China shut down during COVID. We've gone through shortages ourselves before, so it's not like this is a complete unknown to us. But the point is that we can the short-term pain is going to be a lot more harmful for us politically, and long-term pain is something that China's economy has increasingly become used to, I think.
So you said they get around this by shipping all of their goods to third countries that then ship it here anyway. So cheating, basically. And I think a lot about Russia and what happened with Russian oil during the shutdown because of their invasion of Ukraine. Is it going to be the same sort of situation? We want to punish China, but not so much that it punishes our consumers, so we turn a blind eye, or is there a way that we shut that down?
So in theory, we're going to be negotiating these deals with different countries, especially in Southeast Asia. And one component is supposed to be that you really have to clamp down on transshipment. This is completely illegal. That said, enforcement is going to be incredibly difficult to pull off, especially for these countries. We ourselves are under-resourced when it comes to CBP in America. The idea that we can enforce this abroad, I think, stretches the imagination.
I thought that we were making some progress on this with Mexico. Mexico has been a big part of the problem, which is why USMCA is under so much pressure. They've allowed far too many Chinese imports that then wind up over here. Do we have more teeth in this argument right now?
Look, we could try to pressure Vietnam to do a better job. We could try to pressure, Malaysia to do a better job and so on and so forth. I'm just not sure that it's going to work as much. And then there's a political aspect, right? Do we allow some of it to happen anyway because of that?
Because of the whole argument. Okay, so is our way of measuring this, let's say we had the head of the Port of Los Angeles and Long Beach on yesterday. Yeah. They're expecting a 35% drop in shipments coming in from Asia starting next week. Yeah. If we see an increase in those shipments, does that tell us that, okay, Vietnam and India and other places are manufacturing more, or does that tell us that, okay, if we see a return to those shipments, it's cheating because they can't ramp up production that quickly?
I think if it's happening right away, if port calls from other countries are fine, looking stable, or not really affected, it's probably a lot of transshipment going on, and then increasingly perhaps they ramp up capacity, to actually legitimately produce more. So it's all very easy.
What's your gut telling you then? Summarize all this. How long does it last? Who do both sides blink? Right. And is it going to be sort of a watered down agreement that both sides can say looks pretty good, but it's the status quo is maintained?
I think the bottom line for markets is the president wants to do a deal, and I think the Communist Party is basically banking on the president just picking up the phone and saying, we're going to do a deal, and essentially folding.
That's what you think they're counting on. And how long does that take? When does that happen?
I think if the short-term pain really builds, I see that happening, and it could happen in a matter of weeks.
Short-term pain here?
Short-term pain here.
And what's the pain look like? The Americans seeing a little bit of a price increase?
Price increase is in shortages. Shortages what everybody...
Shortages.
Going back to
And so you think part of this is when the Chinese say there are no negotiations, there are no negotiations because they're just waiting for this?
They're absolutely waiting for this. They're not banking on their own economic resilience. They're just banking on us saying, let's do a deal. That's been their bet all along. The president wants to do a deal.
And they are fully willing to wait, and even if it's bad over there. But they've had so many, overbuilding, and they need to make stuff and then dump it. I mean, it's not a great economic model that they have.
That's why I say the short-term pain here is going to put a lot of pressure on us. The pain over there is going to take a while to build up.
The way
so they've got a little bit more of a runway there too before they bend.
This goes back to the whole.
Yeah. Shazad, thank you.
Earlier
come
conversation.
Back if you see big changes in any of the data.
Absolutely, we're collecting this real time, so happy to be back.
That's a very good insight.
Well, we'll hear it's the greatest deal in
it.
history
Thank you.
when it comes. We'll hear it's the greatest deal.
Oh, I'm sure when we hear, if we ever hear there's a deal, we'll be told it's the greatest deal in history.
Yeah, right. The likes of which we've never seen.